is used, both of these, gold and silver, are used in every single sector of the global economy. Well, let's think about that. What that means is you have the broadest base of functionality and the broadest base of demand. You tell me any other asset that does that. There isn't. So you become your own central banker, right? You're going to count on them to look out for your best interest. Because if you are, I have this bridge in Brooklyn that we could discuss, right? It doesn't happen. They're not going to look for your best interest. You have to do that. But that also comes together with community, right? And the importance of community, because we are not an island. We are really all together on this planet, and coming together, we have the power, we have the strength. But yes, gold and silver in your possession maintains your ability to purchase, because this is a wealth transfer mechanism. If you have everything in fiat money, you will not be able to take advantage of the opportunities that will arise when this debt bubble becomes, it's already popped, when it becomes apparent. But there are opportunities ahead for those that are holding physical gold and silver outside of the system. Be one of them. Don't let those that are in power have all of the opportunities. Being a catalyst is the inflation and the public waking up, because these global central banks have shifted their policy and actually been accumulating gold since 2005, which I think is rather interesting because nobody noticed it until 2010. But of course, it was the crisis that made it apparent to everybody. So I think for the public, we've got more younger people that are coming into the gold and silver market, which is so inspiring to me, because it's not us old people that are going to create this revolution. It's the younger generation that will do that. So I think that's also a catalyst for silver. And you know, silver, most undervalued metal. Look, these markets are not a place where you can get any level of good price discovery. Everything has been turned into a trade. If you think when you pay your utility bill that's actually supply and demand, think again. When you go to the grocery store and you buy your food prices, everything is being guided by traders. That's how the banks make most of their money these days, not from lending, but from trading. So I think that it'll be the inflation, because I think this year we're going to see a lot more and a lot faster inflation, and the public starts to notice it. So I think it's public buying that's going to push it, because central banks have been buying and accumulating it for a long time. But the other thing that I'd like to point out is, if it's so many people are manipulating these markets, why don't we still have $400 gold and $5 silver? So I think that is an indication of an expanding market. And that actually gives me a whole lot of hope.
Imagine a time when global central banks began quietly amassing gold, a trend that started as early as 2005. For years, few noticed this silent accumulation, and it wasn't until the financial crisis of 2010 that the broader public realized what was unfolding behind closed doors. Central banks, traditionally seen as the custodians of fiat currency, had shifted their focus. They were no longer content with paper money, subject to the whims of inflation and debt accumulation. Instead, they turned to tangible assets that have a finite supply, to secure their balance sheets against the storm of economic uncertainty. Now, why is this significant? The answer lies in the dual forces of inflation and market manipulation. Inflation, which many now view as the harbinger of an inevitable revaluation, is more than just a rise in prices. It's a signal that the public is waking up. For years, the mechanics of our everyday transactions, from paying utility bills to grocery shopping, have been governed by algorithms and speculative trading rather than genuine supply and demand. It's no secret that today's market is dominated by traders who drive prices with split-second decisions rather than by the slow, steady hand of true market forces. Let's break this down. Consider how you feel when you see your monthly bills rise. At first, it's just an inconvenience, but over time, it becomes a wake-up call. That sense of urgency, that need to protect one's hard-earned money, is what has driven many young investors to gold and silver. They are not waiting for permission from the old guard. They're stepping into the arena with fresh perspectives, determined to challenge a system that, for too long, has been skewed by hidden interests and manipulated markets. I like to think of this new wave of investors as a revolution in the making. It isn't the seasoned veteran with decades of market experience who will create change. It's the young, energetic crowd ready to reimagine what financial security means in a world dominated by fiat money. They see gold and silver not merely as relics of a bygone era, but as beacons of stability in a turbulent economic landscape. And when you consider that central banks themselves have been hoarding these metals for years, the stage is set for a dramatic revaluation. There's a common question that often pops up. If so many market players are manipulating prices, why haven't we seen gold surge to, say, $400 an ounce or silver to $5 per ounce? This discrepancy isn't a mistake. It's an indication of an expanding market and a complex interplay of forces. The prices we see today are not reflective of the true underlying value of these metals. They're trapped in a cycle, a continuous figure eight or infinity loop, that moves from undervaluation to fair valuation and then to overvaluation. Right now, I'd argue that both gold and silver are still undervalued, waiting on the precipice of an overnight revaluation that will finally align prices with their fundamental worth. Let's pause for a moment and consider the concept of fundamental value. Hard assets like gold and silver have intrinsic worth because they are finite. Unlike fiat currencies, which can be printed ad infinitum, there's only so much gold in the world. Even with new discoveries in places like China, the physical supply remains limited. This scarcity is what gives these metals their allure and long-term value. In a world where debt-based money is the norm, gold and silver represent a return to a more stable, tangible measure of wealth, a safeguard against the erosive power of inflation. I can almost hear some of you asking, Lynette, if gold is so valuable, why don't we see it priced at, say, $40,000 an ounce? Well, that's because the market is still in its early stages of reawakening. The current pricing is a result of decades of engineered suppression and manipulation by those who benefit most from a fiat system. But as inflation accelerates, faster and more relentlessly than we've seen in years, the public is beginning to notice the cracks in the system. Public buying is poised to be the spark that ignites a long overdue correction. There's an interesting tweet I came across recently from a respected financial analyst, let's call him at Market Maven, who noted, when central banks hoard gold, they're not just buying a metal, they're betting on a future where fiat crumbles under its own weight. This sentiment captures the essence of what we're witnessing today. It's not merely about the physical metal, it's about a fundamental shift in how we view money, value, and security. So what does this mean for you, our viewers? It means that we are at a pivotal moment, a crossroads between an outdated monetary system and a future where hard assets reclaim their rightful place. The accumulation of gold and silver by central banks is not a secret conspiracy, but a rational strategy to protect national wealth in uncertain times. And the fact that the younger generation is embracing these metals en masse is a clear signal that the public is ready for change.
And I think both metals, you look at the fundamental value, because one thing I learned from my Uncle Al, and when you're dealing with hard assets, is it always goes from undervaluation to fair valuation to overvaluation, like this continuous figure eight, right? An infinity sign. And so where are we now? We're probably right about here, still in undervaluation. And I say that if they were going to do an overnight revaluation, because that is when we will see it move toward its fundamental value. Because what gold and silver are the flip side of the fiat money, the debt-based money. So it's easy enough to go ahead and say, okay, how much debt is there in this world? And how much gold is there in this world? Even with the new gold find in China, right? Anytime you get physical, there is a finite amount, period, right? So it doesn't really matter, but you look at this, and I know that gold is really worth somewhere north of $40,000 an ounce, and silver's worth somewhere north of $2,000 an ounce. So at $2,600, $2,700, $3,000, or at $30, it's ridiculous. Having said that, though, I think what we're headed into, and I think it's already begun, is the hyperinflationary depression. And I've looked at enough hyperinflationary circumstances, and you see that gold-silver ratio gap grow more and more narrow, but then toward the end of it, gold expands because gold is the primary currency metal. Silver is used in manufacturing as well. Gold is recoverable, silver is a diminishing asset, gets used up. So there is really no good justifications for the prices, but I think it's public participation that will push that. And I could easily see silver, I mean, it could have happened this year too. But what you can't control is how much gold and silver is created by these contracts that do not and never will exist.
If you recall from our previous discussion, we talked about how central banks have been quietly accumulating gold over the past couple of decades as a hedge against the inherent risks of a fiat monetary system. This accumulation, coupled with the rising awareness of inflation's erosive effects, has set the stage for an overdue correction. Today, I want to take you on a detailed journey into why and how this revaluation will unfold. Let's start by examining the phenomenon of hyperinflationary depression. In many historical instances, when a country's fiat currency loses its value, the population instinctively turns to hard assets like gold and silver for shelter. In such crises, the gold-to-silver ratio, a key metric that compares the relative values of these two metals, often narrows dramatically. Why? Because while silver plays a critical role in manufacturing and industrial processes, its utility in everyday commerce makes it an attractive option during periods of economic distress. Gold, on the other hand, is revered as the ultimate store of value, a financial safe haven that transcends market whims. The current market dynamics suggest that we may very well be on the brink of such a transition. While the prices of gold and silver in today's markets may seem absurdly low compared to their potential fundamental values, these prices are not determined solely by physical scarcity. They're also the product of complex contracts, speculative trading, and, yes, deliberate market manipulation. Think about it. If traders and financial institutions could control the production of these metals through contracts that do not and never will exist in physical form, then the prices we see are nothing more than a carefully choreographed illusion. I often remind my viewers of a simple truth I learned early in my career. Hard assets, by their very nature, are finite. Gold, as a physical substance, has an intrinsic value that no paper currency can ever match. Despite occasional new finds, even in resource-rich regions like China, the total amount of gold in the world is, and always will be, limited. And this finite supply is precisely what makes gold an antidote to inflation. As governments continue to print money to service mounting debts, the value of fiat currencies diminishes. In contrast, gold stands as an immutable measure of wealth, immune to the endless cycles of devaluation. But let's dig a little deeper. How do we reconcile the current market prices with the fundamental worth of these metals? It comes down to an imbalance, a gap created by decades of suppression and manipulation. Imagine the market as a massive, unwieldy seesaw. On one end, you have the true intrinsic value of gold and silver. On the other, the artificially depressed prices maintained by an intricate network of contracts and speculative trades. The moment this seesaw tips, triggered by widespread public buying and a loss of confidence in fiat currencies, the revaluation could be nothing short of explosive. Recent articles in leading financial outlets have pointed to signs of this impending shift. For example, several economists have noted that as inflation accelerates, investors are increasingly turning to physical assets as a hedge against uncertainty. In a recent Forbes piece, one analyst argued that the combination of central bank buying and public awakening is the perfect recipe for a market correction that will realign prices with true scarcity. Such observations aren't isolated. They resonate with the sentiments of everyday investors and financial experts alike. Now let's talk about the role of public participation in this unfolding drama. It's easy to feel overwhelmed by the sheer scale of market manipulation. After all, major institutions and banks wield enormous power, and their trading strategies can obscure the underlying fundamentals. However, what is often underestimated is the power of collective action. When millions of individual investors, especially those from the younger generation, start buying gold and silver in significant volumes, They are not merely participating in a speculative frenzy. They are actively challenging a system that has long been skewed in favor of debt-based money. I like to share a humorous analogy with my viewers. Think of the market as a massive amusement park. For decades, the ride, the prices of gold and silver, has been controlled by a select few who decide when the brakes are applied and when the speed is ramped up. But what happens when the park's visitors decide to take matters into their own hands? Suddenly, the ride is no longer the same. The controls shift, and the collective enthusiasm of the crowd can cause the ride to accelerate in ways that even the operators didn't anticipate. That's exactly what we're witnessing now. A grassroots movement that could redefine market dynamics overnight. Of course, this isn't to say that the journey will be smooth. The path to revaluation is fraught with uncertainty. Much like any major economic transition, there will be periods of volatility, moments when the market appears to be stabilizing, only to plunge again as the forces of inflation and speculation collide. But history has shown us that these cycles, though turbulent, are ultimately self-correcting. When the true value of hard assets emerges from beneath layers of manipulation, it brings with it a clarity that can redefine financial markets for generations. Let's also consider the broader implications of this revaluation. Beyond the immediate impact on gold and silver prices, a true correction in the hard asset market has the potential to upend our entire financial system. It challenges the very notion of fiat money, a system built on the promise of trust rather than tangible assets. By shifting the focus back to physical wealth, we may be paving the way for a more transparent and sustainable economic model, one in which the value of money is anchored in something real and measurable. To illustrate this point, consider the historical context of monetary systems. For centuries, economies thrived on a standard that was as tangible as it was reliable, a gold standard. Though modern economies abandon this system in favor of fiat currencies, the principles remain unchanged. Hard assets represent a counterbalance to the speculative nature of debt-based money. They provide a stabilizing force that can restore confidence in times of crisis. And as more people begin to recognize this fundamental truth, the market for gold and silver is likely to undergo a profound transformation. I want to take a moment to address a question that many of you have asked. Why now? Why is this revaluation happening at this particular moment? The answer is multifaceted. On one hand, we're witnessing an acceleration of inflation, a trend that has been building for years but is now coming into sharper focus. On the other hand, central banks are no longer the secretive players they once were. Their actions are now visible in the form of massive, sustained gold purchases. When these two forces collide with a growing wave of public awareness and participation, it creates the ideal conditions for a market reset. Before I wrap up this segment, let's have a little fun. I recently came across a quirky tweet that read, "Gold, because sometimes your money needs a rock-solid backup plan." It's a lighthearted reminder that while markets can be unpredictable, the inherent value of gold remains unshaken, a sentiment that echoes through every economic downturn and every inflationary surge. It's this timeless quality that makes gold and silver not only fascinating investments, but also symbols of resilience and hope in an ever-changing world. In conclusion, as we stand at the cusp of what could be a transformative era in finance, it's clear that the forces of inflation, market manipulation, and public awakening are converging in a way that promises to redefine our relationship with money. The accumulation of gold and silver by central banks, combined with the burgeoning interest of a younger generation, is setting the stage for an unprecedented revaluation. While the journey ahead may be volatile, it is also filled with immense potential, a chance to restore balance in a system long skewed by the ephemeral promises of fiat currencies. So, whether you're a seasoned investor or just beginning to explore the world of hard assets, remember this: the future belongs to those who are willing to look beyond the surface, to question established norms, and to embrace the enduring value of tangible wealth. Thank you for joining me on this deep dive into the dynamics of gold and silver. In our next discussion, we'll explore strategies for navigating this evolving landscape and share practical tips for protecting your wealth in uncertain times. Until then, keep questioning, keep learning, and as always, stay curious.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.